Hey guys, it's Jake with Shoemaker Invest. Today's the first video of a two-part series going over financial statements. Not company-specific financial statements, but personal financial statements. Every single company, large and small, produces financial statements either on a monthly, quarterly, or yearly basis that gives them a good sense of their operations, their financial position, and as well as cash flows. And they take all this information and analyze it and use that to determine how they want to allocate their resources, whether it be by expanding and growing, hiring more people, purchasing assets such as equipment or other companies, as well as paying down debt and various other things. Now, the funny thing is, us as individuals rarely ever produce our own personal financial statements. And I wonder why that is. So in this video, we're going to dive in and build our own custom personal cash flow statement that we can then analyze from month to month basis and see where our money actually is going. All right, guys, let's dive into this. So I put together this monthly cash flow statement. It's nothing crazy. It's an income and expense side. This looks a little different than your typical cash flow statement that you would see from a corporation, but it's going to work perfectly for a personal cash flow statement. Now, I'm going to try to make this available so it can be downloaded and you guys can follow along. But if not, you can always just Google a personal cash flow statement and download a template or make your own. Now, I pre-populated everything just to make it a little easier and quicker with random numbers that I just kind of came up with on the fly. What you may be thinking too is this looks kind of like a budget. However, this is not a budget. This can be used to be turned into a budget through our expenses, which maybe we'll make a video on in the future. But this cash flow statement is going to be represented in past cash flows. So we would do this at the end of the month versus a budget is predicting future cash. Now, let's get started. We can take a look at the income section. I split it into two different categories, earned and other. Now, most of you guys are probably familiar with the three ways the IRS categorizes income, and that is active, passive, and portfolio. Earned, essentially in this case, is like active. It's going to be you're going to be receive money based on your time spent, whereas other is kind of a combination of passive as well as portfolio, in which it's not going to be a direct correlation between your time. So starting with the earned section here, I provided two spots for salaries in case you have two jobs. But what we're going to do here is take the net amount from your paycheck. So depending on how you get paid, if you get paid bi-weekly or bi-monthly, you can add up both of those paychecks. And what we're going to do is take the net amount and add back in any 401k contributions or IRA contributions or any contributions from any kind of employer-sponsored retirement fund. And the reason why we're going to add those back in is because we're actually going to take those out again over here in the investment column of our expenses, and we don't want to double count for those. Now, there's a couple different ways in which you can start to fill this out, and you can get super specific or less specific. Again, in our case, we're just going to kind of go off of that you're getting paid twice a month. But if you do get paid bi-weekly, you're technically going to have 1 month that's going to have an extra pay period. So that would need to be taken into account, but it also depends how often you plan on filling this out. If you have never done a personal cash flow statement before, any time is going to be better than before. But to get the best results, you're going to want to try to do this every month or at least every quarter. But another way what you could do is just fill it out once and kind of use that to project or kind of use that as the rough goal for every single month and make your analysis based on that. But again, I recommend doing it every month or at least every other month to kind of see where you have improvements and how your spend actually changes. Because it will change depending on the season and various things like that in terms of your personal expenses. Anyway, back to the income. So this person makes $4,500 a month. He doesn't have a second job, so there's no second salary. This bonus is left blank too, and this bonus is meant for a monthly bonus if you have a sales job or some sort of monthly incentive program where you'll get money. This is not a spot for an annual bonus that you'd get at, let's say, Christmas time, because that if we put that in, it's going to kind of throw off our cash flow and overstate our income. For instance, if you get a $6,000 bonus at Christmas time, divided by 12, that's $500 a month. we're not going to actually allocate that $500 here because it's April and we didn't actually get that money yet. So it's going to begin overstating our income. So we're going to leave that blank. And then I added a spot for a side hustle. Let's say this guy, mows a couple lawns, so he gets another $400 a month from his side hustle. And then on the other income section, I just added a spot for rent in case you have a rental property or something like that where you rent something else out. Dividends. This guy owns a couple stocks, so he's getting dividends. And again, so you're going to have expenses and incomes like dividends or like various utility bills that don't get billed monthly. They get billed quarterly or semi-annually or something like that. So again, that's why it helps a lot if you do this each month to get the most accurate representation. Because like this dividend's only going to be quarterly, for instance. So you're not going to have this $50 every month. Next, capital gains. This would be if you sold any stocks, and then another spot for other investments of if you loan out money or anything like that. You can put that in here. And then we have our two totals, just kind of to see where most of our money comes from. And then we have our income total down here, so we're at $49.50. Next, we can move on to our expenses. And I broke this category out into 4 different subcategories. We have our fixed. That is going to be for all of your fixed expenses. You can't really change them. They're kind of just stuck. You have to pay them. Variable, on the other hand, are more of your personal habits and choices that you make throughout the month and how you spend your money. And these can be changed most of the time. So this is where we're going to really focus when we do an analysis. Then I have utilities. These are kind of, again, kind of fall into the fixed category. However, you can try to kind of adjust them. Let's say if you wanted to, stop leaving all your lights on, you could, try to adjust your electricity and something like that. And then the fourth category is investment. And this is kind of a fake or contra expense because we're really saving it, but that's why I have it in a separate category. But we're going to treat it like an expense to get into that mindset. So that's the purpose of this fourth category. Another thing I forgot to mention over here in the fixed category are our memberships and subscriptions. It's good to list all of those out because a lot of times, or at least happens to me all the time, is I'll sign up for a free trial of something to use it, for a week or a month and then completely forget to cancel it. So next thing you know, I'm paying for 18 different memberships that I don't want or I meant to cancel. And so by doing this, it's a good way to make sure that you do cancel it before you start getting charged for it. Which reminds me, I need to cancel my ESPN Plus membership because I've been paying $5 a month on that for several months now. $5 isn't that much, but probably why I haven't canceled it. But if it was something higher, then yeah, you start to get irritated. So that's another reason why this may be beneficial. And then so going off this example, we have our total fixed of 2420, total variable, total utilities, and total investment. And then what I did down here at the bottom is I totaled our expenses, all 4 of these categories, and then I did another total of all of our actual expenses, and then we added in or didn't take out our investment portion. So summarize, we have a net income or total income of $49.50. Our total expenses are $46.20. And that gives us with a monthly net positive cash flow of $30. And then I did the monthly net less the investment. So we're technically saving this or investing this, so it's not really spent. So that brings us up to $330. We just took our $30 from net and then added in our total investment down here. And then I took it one step further and calculated our savings rate. So that's just what I did that based on our monthly net less investment figure. So $330 is 6.66% of our total income. So that's what this person's savings rate is, 6.67%. Now, in 2019, the average American savings rate was actually 7.6%. However, one thing we didn't calculate in here was if you have an employer match on your 401k or IRA or any of those investment vehicles that are sponsored by your work, in which case, if this person had like a 3% 401k match, that would actually bump this up to 9.67%, and then they'd be over the 2019 American average. So now we have our savings rate, and is this a good savings rate? Is this a bad savings rate? It's hard to kind of just go based off your savings rate. Each kind of individual person, and it's in case by case specific. If this is just a single person with this savings rate versus if this is a total family with their expenses and savings rate and monthly net, there's so many different factors that need to go in, and it's kind of hard to analyze unless you, except for a case by case basis. But one thing that we can look at is track our expenses and see where we're kind of high and where we're maybe not so high. So, for instance, looking at this, we can see that entertainment was $500 a month. Now, it's kind of a broad category, but you kind of, when you fill this out for yourself, you know what you want to kind of classify as entertainment. So here, I would think that this would be, going out to the bars every weekend. So if this guy went out, Friday and Saturday for all 4 weeks of the month, spent $500 at the bars, that's definitely an area where he can easily cut back and save money. Same thing with food out. That's another big one that's typically super high. That's way easy to cut back on. Groceries that can be cut back on too. So another thing is credit cards. This would be if you have a balance on your credit card and you're just trying to pay it off. If you racked up a $10,000 balance somehow and you can't, pay it off each month, so you're just kind of putting a minimum payment, or $500 would be a minimum payment, but that'd be a hefty payment. But um, this person looks like they're proactively trying to pay off their card. But if once you get rid of your credit card debt, then this will obviously make your monthly net income, your cash flow, go up a lot. If you don't do this currently and you give it a shot, you're in so much better shape. You don't have to be spot on the first month, or even if you just do this for 1 month, just to get a good idea of where you're spending, you can cut down based on that. That's awesome. If you want to do it every month, that's even better. Or if you just want to do it kind of periodically to check in to see how you're doing, that's awesome as well. And it makes it a lot easier and more fun if you think about it like a game. Like, oh, where can I save money this month? Or how am I doing this month? Or can I beat last month's monthly net cash flow? Things like that. Definitely making a game out of it makes it way easier, more fun, and gets you kind of motivated into thinking about it. I know this is a sore subject for a lot of people. They don't like to talk about their personal finances at all. Some people, you try to bring it up to them, or you mention something, hey, maybe you should be doing this, or maybe you shouldn't be doing that, and they shut down and get all angry and won't talk to you. But if you give this a try, or recommend this strategy for them or yourself, it will definitely help you in the long run. So thanks for watching this video. Next video, we're going to take a look at our balance sheet, and we're going to actually use this to populate part of our balance sheet and go from there. And then we can actually figure out what our net worth is. So thanks for watching, and stay tuned for the next video, guys.